Hey, what's going on, guys? It looks like Airbnb hosts, particularly those that bought a house specifically for Airbnb in the last 2 years or so, could be in a really sticky situation. This source, which is Azebo, shows the top 15 Airbnb revenue collapse cities. You got Phoenix, Texas. I'm surprised that Las Vegas, Nevada isn't on here. But this is overall just not good. So we saw revenues decline for Airbnb when 2020 happened. Obviously, people were locked down, they weren't traveling at all. And then in 2021, 2022, people started to come back out of their houses, they started to travel. They also started racking up a lot of credit card debt. But all of that flowed into Airbnb rentals. Like everything, these Airbnbs were doing really, really well. So everyone else started to do Airbnbs. The problem is that now we're in 2023 and things are starting to normalize. We're heading into a recession. People have a lot less discretionary income to travel, go to Las Vegas, Phoenix, Austin, places like that. And that means revenues are going to drop. But Airbnb is actually seeing some of the best demand that it has ever seen. The problem is, though, there are just way more Airbnb properties now than there is demand, so the market is saturated. That's why you're seeing these revenues down. It doesn't show the occupancy number here, but the occupancy numbers might be okay, but they've had to either reduce prices or you are seeing a lot more vacancies. In this article from Insider, in the third quarter of 2022, the occupancy rate for short-term rentals fell year over year in 31 of the 50 largest US markets. And I guarantee by now, it's likely only worse. We are in the summer months though, so people do travel. Those people that still have some money that may not be feeling the recession yet, but I would expect this to continue to slow down. And this year we do have some data. We had the Super Bowl. The story remains the same in February, the month of the Super Bowl. Occupancy in the Phoenix Scottsdale metro was down 13.6% year over year, despite a 60% increase in demand. The number of listings, it just turned out, was up 85%. So it sounds like Phoenix, Scottsdale area is just turning into one big Airbnb. The problem is that a lot of that demand, if it was from new home purchases, those homeowners are going to be in a tight spot because there's a very good chance that they overpaid for their house. The thing that some Airbnb people do is they buy the house and they might, let's say the house is worth, on sale for $350,000. And they can rent it to a single, long-term tenant, and they can get, let's use 1% rule, like $3,500, right? Or no, actually, let's say it's less than that. Let's say it's like $2,500. So $350,000 house, $2,500 is what the rent would be. And let's say that they don't think that that's going to be worth it. They need to rehab the property. Maybe it needs more maintenance, or it's in a neighborhood where they think there's going to be more maintenance. But they say, aha, this price, I can pay this price and make it work. I can make $6,000 a month. I'll just Airbnb it. The problem is, as Airbnbs start to slow down and regulations potentially come into some of these cities, what you might find is that your Airbnb revenue no longer makes sense for that property. So there's a good chance that house prices, they're going to be coming down with layoffs and a recession most likely, along with those elevated interest rates. But it's also the case that you might see in a lot of destinations where there's tourists, some Airbnb properties that people bought that don't make sense financially anymore start to hit the market. And we have needed a rebound in prices. If you go to YChart, the US median sales price for new home sales was all the way up to near $500,000 in October last year. And it looks like it dropped in May down to $416,000. So it has come down almost like, what is that, near 20%. That's like 18, 17%, something like that. At the same time, though, you've got existing home sales that are creeping up to that $400,000 mark. So new homes and existing home sales, median prices are almost the same. So it almost feels like it would make more sense just to buy a new house. But a lot of variables in that, right? Location, 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 amongst other things. SFR Investor over on Twitter, the tide is going out. Make sure you have your swim trunks on. Someone else here, is there blood in the streets? Not yet, but a boy sure feels like it's coming. Curious to know what your top 3 indications are. He says here, getting 3 to 5 calls a week from people looking for new bridge financing. Was 1 to 2 per week 4 months ago, none at all 12 months ago. Tons of operators with floating debt, more and more popping up weekly. multiple large firms, 100 million plus, making mass layoffs. If you aren't familiar with what a bridge loan is, I've got it highlighted here. Bridge financing bridges the gap between the time when a company's money is set to run out. So if you're running an Airbnb, maybe you're running short on the revenue and you need to pay your mortgage and your expenses, and when it can expect to receive an infusion of funds later on. So maybe Airbnb, they're running low on funds. They think the next couple months is going to be an uptick in revenue, so they need to get a bridge loan. And the problem I saw here was that usually if people are looking for a bridge funding like this, it's likely that they're very close to defaulting on their mortgages. And these bridge loans aren't cheap. They are not cheap at all. So this is like a worst case scenario type of loan. And it looks like, and from Nick Gurley here, it looks like home builders are still cutting prices. So with new home prices down 16%, okay, so that's what it was, 16% from last October, a much faster decline than what occurred in the beginning stages of 2008 downturn. So yeah, look at the 2008, the house prices start to come down, and look at what's happening in new builds here, just off a cliff. So what's most likely going to happen, it's like if you're wholesaling real estate, right? If the house prices are coming down and you're going to get it under contract to try to either flip it yourself or to sell it to a flipper, you need to consider that the house prices could continue dropping another 15%. So not right now you buy it at this price, but you have to imagine the house prices are going to keep on going down. And it's really, are the sellers noticing the situation that's going on right now? Or are they just sitting there okay with their 3% mortgages, a lot of them, because money was so cheap? The variable here that's going to throw a wrench in this is that as we go into a recession, there's likely going to be a lot of layoffs. And there's already corporate bankruptcies happening at a rate that's higher than that of 2008. So as these layoffs start to happen, people are going to lose their jobs. They're going to miss their mortgage payments or their rent payments. The landlords are going to have a tough time paying all that, and we're likely going to see a whole bunch of foreclosures and supply hit the market, which should only continue to bring the prices down. And this here from Kobisi Letter, median monthly payment listed on mortgage applications sits record $2,165 according to PBS. The median payment is up 14.1% over the last year and 2.5% over the last month. Meanwhile, average interest rate is 7.15%. So what I did is I went to a mortgage calculator and I plugged this in. Let's just use Connecticut because they have lower property taxes. Use 7.15% interest, 30-year fixed, down payment of 5%, because I don't think most people have that 20%, on a $400,000 mortgage, which is in between this $396 and this $416, right? So if you do that, the loan here, and this doesn't even include taxes and fees, is $2,567. So if this tweet is actually correct and the payment is $2,165, maybe that indicates that we don't even have the latest data yet from Y-Charts and from the Fred. So it could be that house prices have come down even further already. We're just going to have to wait and see. So if you're looking for deals now or in the next, 6 to 12 months, there could be some amazing real estate deals. So you can get on the phone, send out your direct mail, do whatever you want to try to generate these leads. But it looks like we might have a 2008 style recession here with real estate, potentially, depending on what happens. If you're still here, don't forget to hit the like button, subscribe, and hit that notification bell for more videos in the future, and I'll see you on the next video.